Yeah, there's no question that weather continues to show up as a factor. I mean, of the 13 industries that we cover here, retail is one of them. Clearly that had an impact. The entertainment industry, weather clearly has an impact on people's ability to get out and spend money in that industry, so we're seeing that show up. It's also important to note that in the 6-month period that ended with March, the rate of growth has decelerated compared to the prior 6 months. So we're clearly seeing a growing trend, but a slowing in the rate of growth.
What I'm seeing is a shift away from very speculative names, which kind of is telling us that I'm not the only one who's concerned that we've gone a little too far too quickly. Secondly, I'm very concerned about the flattening of the yield curve. So interest rates appear to be flattening out, and that is seldom a good sign for a high-growth economy. So I'm concerned the bond market's telling us that growth is coming, but not in the speed we would like. There's a lot of talk of the second half picking up a lot of steam, and perhaps that's not what's going to happen.
Out in upcoming meetings, including today's, is what Draghi says on the euro, because we've seen an escalation in rhetoric on this note, and the fact that he has a line in the sand, or a supposed line in the sand at 136, which is anchoring the long-term ECB staff projections. So if we see euro showing trend signs of moving well above 136, then I think he will act on that, more so in the currency right now, surprisingly, versus inflation. And I think that's what the ECB had been expecting all along. The US normalization on a relative basis means it's more stimulative conditions for the ECB, but for the Eurozone. But it's not happening, so probably they will have to act at some point.
Yeah, I mean, look, the key really is Microsoft going to be a successful cloud player? Nadella, that's been his core competency. For us to get more bullish, it's them on the cloud having more success, but really mobile. I mean, the elephant in the room continues to be Nokia, the $7 billion head-scratcher acquisition. They need to be a better player and a bigger market share on mobile as well as on tablets. If that's successful, that really gets us incrementally more positive, and I think it shows that Nadella is the real deal in terms of turning this around.
Yeah, we do think it continues. Starting about a month ago, you started to see the air come out of the bubble of some of these new tech names. And it's a familiar story. Back in the late 90s, part of my job was to look at those tech IPOs. And there's a lot of the same red flags now that we saw back then. The volume of IPOs, the valuation metrics that we're putting on these companies. When you get to the point where you have to make up new valuation metrics because they don't have revenue or earnings to put the old valuation metrics on, it's usually a sign of trouble. So we think it's early on in the process, and then money's going to flow from new tech to old tech.